What is going on, guys? My name's Christian Robert, and today I'm going to share with you 3 different ways you can get started investing in stocks with $100 or less. In the last week, I've had a few friends reach out to me. They want to get started investing. They don't know how. They think that they need a lot more money than they really do, and that is 100% false. The biggest misconception I heard growing up is that you need a lot of money to get started investing in stocks, and that's not true anymore. We live in a day and age where you can buy a stock and pay $0 in commissions with websites like Robinhood. So you can get started with very little money. So today I put together 3 different scenarios where you can get started on building your portfolio. To start off with, I would go a more conservative route with ETFs. ETF is a exchange traded fund. Think of it as, instead of purchasing one stock, which is an individual company, an ETF is a basket of different companies within that one ETF. So your money's well diversified within that one company or ETF. To start off with, I would go with VWO, which is the Vanguard Emerging Market. One share costs $39.76. And if you look down here, you can see that it has a dividend yield of 2.79. Along with that, I would go with SPHD, which is a personal holding of mine. It's PowerShares S&P 500, high dividend, low volatility. It is a monthly dividend stock, which I love, and it has a dividend yield of 4.33. Keep in mind, Robinhood, some of these numbers are a tiny bit off, but that's okay. And to round this one out, I would go with PEY, which is PowerShares High Yield Equity Dividend Achievers. There's a bit of overlap between company holdings between this one and SPHD, but that's okay just for the message of this video. This has a dividend yield of 4.47. So if you add those 3 together, it comes out to $96.11. with an average dividend of 3.86. So that's not bad for starting off with less than $100. Next, you might want to go with more growth stocks. So to start off with that, I would go with eBay. eBay is currently at $30.43. It's had a bit of a rough year. It's down almost 20%. 5-year chart shows it's up 38%. eBay is an e-commerce company. E-commerce is only getting bigger from here. More people are shopping and trading things online, so it's pretty self-explanatory if you believe in the company. I see it only going up from here. Along with that, I would go with AMD. AMD stands for Advanced Micro Device. It is a semiconductor company. It's a very popular stock on Robinhood. It's currently $20.28. If you see the 1-year chart, you see that it's up 71%. And a 5-year chart shows it's up 384%. Semiconductors are a great sector to be in right now, especially with things like 5G coming out. And to round this one out, I would go with INTC, which is Intel. I'm sure you've heard of Intel. It's $48.99 right now. I threw this one in growth because I do think that there's a lot of growth ahead of it with 5G and everything coming out. A 1-year chart shows it's up 15%. A 5-year chart shows it's up 121%. And if you add these 3 up, it's $99.70. And lastly, if you know me, I'm a dividend investor. My main portfolio consists of all dividend paying stocks. That's where I'm building my portfolio. I aim to one day live off dividends. So if I were going to do any route, I would go through this route. And so to start off the dividend category, I would go with SO. SO is Southern Company. I'm sure you've heard of this one before. A 1-year chart shows it's up 8.96%. A 5-year chart shows it's up 43%. It has a dividend yield of 4.778. Founded in 1945. It's been around for a long time. Along with that, I would go with T, which is AT&T. It's had a bit of a rough year. It's down 10%. It was down, if you can see here, it was down 21%. It was down to $26.91. I believe I bought a few shares around here. Anyways, a 5-year chart shows it's up 19%. With I keep saying 5G, but when 5G comes out, I see all these stocks having success. It has a dividend yield of around 5.07. That looks a little off to me, but that's okay. And along with that, I would go with HBAN, which is Huntington Bank. Huntington Bank is a bank that I personally use, so that's why I threw this in here. It's at $12.63. 1-year chart shows it's down 16%. 5-year chart shows it's up 47%. Banks are a staple sector to be in. I'd rather go with a smaller cap bank. That's just my personal preference. But it's got a dividend of 2.40. So if you add those three up, you're looking at $90.07. You could even add a share of Ford in there for $8.82. And Ford has a dividend of 4.8. And that brings you at a total of $98.89. Best part is an average dividend of 6.27 or $5.60 in received dividends your first year. So that is 3 ways you can get started investing in stocks. I hope you found this video helpful in any way. And if you enjoyed it, all I ask is that you subscribe, comment down below, tell me what you think, and I'll see you in the next one.